We'll talk about markets in greater detail, but first let's talk about a set of numbers which have just come in a few minutes back and have beaten street estimates as well. Polaris, Arun Jain and Govind Singhal join in to detail those numbers for us. Gentlemen, afternoon. Thanks for joining in. Arun, if you could start by detailing your FY11 guidance, 31 to 33% growth. What are you basing that on in terms of volumes and revenues and pricing?
I think our three-pronged strategy which we articulated last year, working on intellect expansion, our accounts which we have signed up over the period of time, and acquisition because of the war chest of $110 million available with us, are the three strategy which is continuing over this year. So what momentum we could able to build up last year when the entire financial industry was low, in spite of that we could able to grow 42% on the profitability compared to last year's same quarter, and 16% in dollar terms sequentially quarter. I think we are carrying that momentum which will give us 30 to 33% improvement in EPS next year.
Arun, afternoon. Your guidance indicates that it would be an EPS of about 20 rupees per share, but for this year, the full year, you've actually exceeded your guidance. So any chance that you are actually looking to up that level a little bit and you might do more than about 20.5 to a share?
Yeah, maybe possible, because in product business, our license revenue, we are calculating certain number that license we will be able to sell, and I think the traction which is happening, in first quarter we sold only 9 deals in first quarter, second quarter was around 14, third quarter was close to 18, and this quarter we sold 22 deals. And if that traction remains there, I think there can be possibilities, but at this point of time we want to restrict to the 33% kind of a EPS growth.
Any sense you can give us of the revenues, Arun? What kind of volume growth you expect to see next year, and given prices, what kind of revenue line you're expecting by the end of fiscal year 11?
Udayan, the point is the revenue we are slightly, because in product deals your margins are higher and controllable, revenues are slightly not as much controllable. So last time we stopped giving the revenue guidance, but the profit guidance we are controlling it, because I want to invest more money in my sales and marketing for the remaining profit which comes extra to me. So I want to keep that investor protected on a particular margin. So last quarter we had a 2.5 crore. I spent more on marketing by going to New York TV and putting a Polaris ad there. So I think that's the strategy which I'm using right now.
Govind, afternoon. On your margin performance, though, you've actually held and in fact bettered margins this quarter, which has come as a surprise. What do you expect to do in the next 2 quarters on a margin performance, and what are you penciling in, both by way of whether you need to incur any other costs, what's happening with pricing, etc.?
Well, we will like to, what we are working towards is to continue with the momentum. However, there are a few elements like compensation revision is one of the major activity, but we are definitely working towards holding on to the numbers.
Do you have a breakup, Govind, between what kind of numbers you will see, or contribution to revenue you will see this year, fiscal year 11, from products versus services, and how each one might grow?
I'm sorry, I'm not able to hear you very clearly.
Just to respond to him, what he's asking is what is the revenue of the ratio between the product and services. Now this quarter we had 23% revenue coming from the product, 77% from the services. Next year we are looking 26% contribution at least from the product business. So we guided the market that will be 30% product in next 3 years. I think we are going in the same direction. So that's a positive direction. So that's why we are able to protect. But yeah, currency is a big animal sitting there. If rupee appreciates more than 44, then I think we will have some issues on EBITDA margins.
What kind of sequential scale up do you hope to do on intellect, though, Arun?
Sequential scale, I think the deal size which have started coming in more $5 million from October to December quarter, and then January to March quarter, again 2 more deals of $5 million. I think these are the scaling up which will result into our revenue upswing in Q2 and Q3 this year. But Q1 will be slightly subdued because of salary adjustment would be there, salary payouts will be there, what we have to roll out as per the market expectation today.
Govind, can you talk a little bit more about the big banking relationships, the two $5 million plus contracts that Arun just spoke about?
Yeah, of course, I can't disclose the names of those customers, but yeah, both these deals are essentially in the space of payments hub, that is and the liquidity product that we have, and they span across the regional implementation in one case and revamping the payments hub in the other case. So these two deals, and in addition to that, we've also signed up a deal in Canada. So I think as Arun said, the average value of the deals is moving up. We moved from an average of about $1 million to $2 to about $5 and more last quarter, and the momentum is there, and we are working to see that we continuously improve that.
Thanks, gentlemen, for joining in. We wish you luck. That's Polaris has reacted well to its numbers, have beaten their EPS guidance for the full year, and for next year they've set out a growth target of between 30 to 31% on the EPS. Let's take a break. Just slipped into the red for the Sensex for the first time today. We'll come back.